Meantime, the spotlight will also be on PFC and REC in trade today. Both stocks are climbing on back of gains on a year-to-date basis. But it's interesting to understand what have been the triggers for these stocks. We've got Vamakshi here who joins in with an in-depth analysis. Vamakshi?
Well, yes, when we look at PFC and REC, both these stocks are perched near their all-time high levels. When you look at the stock performance, yes, PFC is up nearly 90% on a year-to-date basis. And in fact, this is the biggest gain that the company has posted in the first 8 months of the year since its listing. REC is up over 101% on a year-to-date basis. And in fact, this is also the biggest gain that the company has posted in the first 8 months of the year since 2009. Now, as far as some of the triggers are concerned, macro stability, Government of India's thrust, as well as the strengthening balance sheet of power value chains participants are presenting a robust lending opportunity. In fact, brokerages are also highlighting that the planned power sector capex could create a financing opportunity of almost 98,000 crores by FY30, and they believe that both these counters, PFC as well as REC, are well positioned to capitalize on this opportunity. Their loan mix is also changing now. They are focusing on renewable energy as well as the non-power portfolio, and both these companies boast of healthy dividend payout. Now, particularly when PFC is concerned, they are expecting resolution of few projects to come in FY24, and currently nearly 85% of their total stressed assets are being resolved under the NCLT. Yields are also expected to improve for PFC, and that is what the company has highlighted very recently. REC, on the other hand, in a recent con call, they highlighted that they are targeting to be net zero NPA by the end of 2025. They have not added any new NPAs for the last 6 quarters, and in fact, the NIMs are also expected to improve for these for REC to almost 3.5% for FY24. Now, in the past, there have been concerns with regard to the asset quality for both these counters, but that is now changing. REC is seeing a gradual improvement. In fact, the GNPA was at its peak in FY19 at 7.24%, and it has now dropped to the lows of almost 3.42% in FY23. Now, as far as PFC is concerned, GNPA is at 3.9% for FY25, which is at a 6-year low, with asset resolution of nearly 17,100 odd crores seen between FY20 to FY30. Not just that, the valuations also look quite supportive for both these counters. In fact, analysts are highlighting that the valuations do not fully price in strong growth as well as sustainable, healthy asset quality prospects. So all in all, on the back of this, watch out for PFC as well as REC.
Thank you very much, Vamakshi.